Okay, so we've got a pretty big stack of research here about the history of money.
Yeah.
And, I have to admit, at first I thought this deep dive might be a little bit dry,
Right.
but I was so wrong.
It's fascinating, isn't it?
It really is. Like, did you know that pretty much our entire world is built on, like, shared illusion?
Well, it's true. It's everything from, trading goats in the old days to tapping our phones to buy a latte.
Yeah.
It all comes down to this idea that money is basically whatever we all agree it is.
Right. That's what really blew my mind, that whole concept of a shared illusion.
Yes.
It's from that book Sapiens, right?
Right.
By Yuval Noah Harari.
Exactly.
I mean, I've heard of the book, but I never actually...
It's a great book.
Yeah.
Yeah, Harari's argument is that money doesn't have, inherent value, It's not about the thing itself.
Right. So it's not about the gold or the shells or, like the physical object, exactly.
Mm-hmm.
It's more about, the belief system that we're all a part of.
We all buy into it. We trust that these tokens or these pieces of paper or whatever have value.
Right.
And so they do.
At least for now.
Right.
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 I mean, that's what got me thinking, what happens if that trust disappears?
Yeah.
We see it with hyperinflation in places like Venezuela,
Absolutely.
and the money's basically worthless.
Yeah.
So does that mean, any system built on just, faith is kind of shaky?
It's a valid concern. And, even something like the U.S. dollar, it relies so much on this, this global trust in the U.S. economy.
Right.
It is kind of a paradox.
It's so weird.
This very, intangible concept that's propping up the whole thing.
Yeah. Okay, but before we get too far down that road,
Sure.
I want to kind of rewind a bit, go way back.
Okay.
How did we even get to this point? Take me back to the days before we had, standardized money, coins, all that.
The barter system.
Right, the barter system.
So you've got to imagine you're trying to trade, I don't know, a cow for a new plow. But what if the person who makes plows is a vegan?
Right, they don't want a cow.
They don't want the cow, so then you've got to find someone who wants a cow.
Oh my gosh.
And who also has something that the plow maker needs.
What a nightmare.
It's a logistical nightmare.
No wonder they came up with coins.
Right. Huge innovations.
It's like the original, killer app of finance.
Totally.
Right.
Coins standardized everything. Suddenly you've got something that's portable, durable.
You can make change.
You can make change. And of course, they were tied to these precious metals like gold and silver.
That definitely helps.
That helped.
Okay, so that solves a lot of problems.
Mm-hmm.
But then paper money comes into the picture.
Yes.
And if I'm reading my notes right, this started way back in China.
It did, yeah, back in the 11th century.
20th century, wow.
Yeah. Early paper money was basically a receipt for gold or silver.
Oh, okay.
Easier to carry around than a bunch of heavy coins.
Right.
Like the original gold certificates, kind of.
Okay.
But the key thing was you had to trust that the issuer, usually a bank or the government,
right,
actually had the gold to back it up.
So trust was important even way back then.
Oh, absolutely.
And this eventually evolved into what we know as the gold standard, right?
Yeah.
Where countries tied their currencies to a set amount of gold.
Exactly. And the gold standard, it provided stability. It helped with international trade.
Trade trends?
But, it wasn't perfect.
Right.
Countries couldn't just print more money when they needed to, which could really hold back economic growth.
Right, because they were limited by how much gold they actually had.
Literally limited by, what was in their vaults.
But then in the 20th century, we move away from the gold standard.
Yeah, we do. Yeah.
Big changes.
Big changes. The Bretton Woods Agreement in 1944 was kind of a turning point.
All right.
And it made the U.S. dollar the world's reserve currency. And now instead of gold, it's backed by the power of the U.S. economy.
Okay, so now we're in the era of fiat currency.
We are.
But hold on, fiat currency. So if it's not backed by gold, what actually gives it value then?
That's a great question.
Is it just the government saying, trust us?
Well, essentially, yeah.
Wow.
Fiat currency gets its value because the government says so.
Yeah.
And because we all agree to accept it, as a way to buy and sell things.
It's a big leap of faith compared to, actually holding a gold coin.
It is, yeah. A
Right.
bit more abstract.
It feels like we're building this whole system on, I don't know, a foundation of sand.
Yeah.
What if people just lose faith in the government's ability to manage the money?
Well, that is the big question, isn't it?
Yeah.
And, it gives a lot of power to central banks. They can adjust interest rates. They can control how much money is out there.
It's a lot of control.
It is.
But then you have the risk of things like inflation.
Right, especially if they print too much money.
And we've seen that happen over and over.
Yeah, yeah.
Germany in the 1920s,
Yeah.
or even more recently, like Venezuela. That's scary.
Those are definitely some stark examples of what can go wrong when trust in that system breaks down.
Right.
And, even something like the 2008 financial crisis.
Right.
Even though that was caused by a lot of different factors,
Right.
it still showed us how fragile things can be.
How vulnerable.
Vulnerable, yeah, the whole global financial system. I mean, it did shake things up, that's for sure.
Yeah.
But, those kinds of crises, they often lead to changes.
Okay.
New rules and regulations, trying to, make things more stable.
Right. So it's like a wake-up call.
Exactly. It exposes the weak spots.
Makes you rethink things.
Forces you to adapt, yeah.
So who's actually keeping an eye on all of this? Like, who are the watchdogs making sure things don't get out of hand?
Well, here in the UK, you've got the Financial Conduct Authority, the FCA.
Okay, the FCA.
They're the ones responsible for overseeing all the financial markets, the institutions, setting the rules, making sure everyone's playing by the book.
So it's a pretty big job.
Oh, it's a huge job.
It's like they're the referees of the whole financial world.
Yeah, good analogy.
But even with the referees, things still go wrong sometimes.
That's true.
I mean, look at history, the Great Depression,
Right.
the dot-com bubble bursting.
Yeah, no system is perfect, that's for sure.
Right.
And history shows us that finance, it's like this cycle. You get these booms, then busts, periods of stability, and then, bam, a crisis hits.
It's all connected too, isn't it?
Oh, absolutely. It's global.
Yeah.
A problem in one country can ripple out and affect the whole world.
It's kind of like a giant game of Jenga, right?
That's a great way to put it. You pull out the wrong piece and...
The whole thing collapses.
Exactly.
And then you've got to factor in human behavior.
Oh, yeah, that's a big one.
Fear, greed, speculation, all that stuff.
All of it. And sometimes, those human factors, they can outweigh any regulations you put in place.
It's a tricky balance, isn't it?
It really is, this constant tension between innovation, regulation, and good old-fashioned human nature.
No wonder things get messy.
Exactly. But even with all the messiness, there's always been this push to make things, more efficient, easier to use.
Oh, for sure.
Yeah.
I mean, think about how much things have changed, just in terms of how we use money day to day.
Right.
We've gone from those clunky credit card imprinters to just, like, tapping our phones for everything.
It's amazing, isn't it?
It is. It is. So when did this whole payment revolution really kick off?
Well, I'd say it all started back in 1958 with the Bank Americard.
The first credit card?
The very first, the granddaddy of them all.
Wow.
It was revolutionary, Suddenly you didn't have to carry around all this cash.
Can't even imagine life without credit cards now.
Right.
But I do wonder if it made us a little too comfortable with debt.
Oh, that's a good point.
Like out of sight, out of mind.
It's easy to overspend when you're not physically handing over cash.
Exactly. And then just a few years later, we get the ATM.
1967, Barclays Bank in Enfield, London.
The first one ever.
The first one.
So wait, back then you couldn't just get cash whenever you wanted?
Nope. Banks had specific hours you had to go inside, wait in line, talk to a teller.
Oh, wow.
The ATM changed all that.
24/7 access to your money.
Exactly.
That must have blown people's minds at the time.
Well, I'm sure it did.
It's like having a little mini bank branch right there in your pocket.
Yeah, it was a huge shift in how people interacted with their money.
So we've got credit cards, ATMs, and then online banking comes along in 97.
Sumitomo Bank in Japan led the charge on that one.
So now you can manage your finances from home.
From your couch in your pajamas.
Pretty smooth sailing from there, right?
Well, not quite,
Yeah.
because as all these financial transactions moved online, the risks got bigger too.
Right. Cybersecurity becomes a huge issue.
A massive issue.
Yeah.
And then in 2009, we get this whole new game changer, Bitcoin.
Ah, Bitcoin. I remember when that started making headlines.
It was a big deal.
It seems so futuristic, almost like science fiction.
It was a radical departure from traditional finance.
So what's the big deal with Bitcoin? What makes it so different?
Well, for one, it's decentralized.
Okay, so no one person or institution controls it.
Right. And it's all based on this technology called blockchain.
Blockchain. Yeah, I've heard that term thrown around a lot.
It's basically like a public ledger, but digital.
Okay.
And it records every single transaction.
Break that down for me a bit.
So imagine a giant spreadsheet, right?
Okay.
And everyone can see it, but no one can mess with it.
So it's super secure.
Incredibly secure and transparent because everyone can see what's going on.
And that eliminates the need for those middlemen. like banks.
Exactly.
So Bitcoin was kind of like a rebellion against the whole established financial system,
You could definitely see it that way.
like a vote of no confidence in fiat currency and the institutions that control it.
Yeah, a lot of early adopters felt that way.
It definitely gained traction fast.
It did. And by 2013, you had the first Bitcoin ATM popping up in Vancouver, Canada.
Wow, from the first ATM giving out cash to one dispensing Bitcoin.
Full circle, but also into uncharted territory.
It does feel like we're on the edge of something completely new and kind of unknown.
It's exciting, but also a little scary, right?
It is, like we're seeing the birth of a whole new financial era.
And the rules are still being written.
That's both exhilarating and terrifying at the same time.
Totally. But even with all these innovations, there are still some big questions we have to grapple with.
Like what? What kind of questions?
Well, for one, how do you balance the need for stability
Right.
with this desire for innovation?
Because too much regulation could stifle progress,
Exactly.
but too little, and things could spiral out of control.
Exactly. And then you have the ethical dimension, too.
Right.
As technology changes finance, we need to think about who benefits and who gets left behind.
That's a huge one. You can't just blindly embrace technology without thinking about the impact on people.
Absolutely. And then there's the most fundamental question of all.
Which is?
What do we actually want from our financial systems?
Oh, that's a deep question.
It is. What do we value most? Security, freedom, transparency?
It's a lot to think about.
It is, and it's not just for economists and policymakers to figure out.
So for everyone listening out there, what's the one thing you'd want them to take away from all of this?
I think it's that this whole evolution of money, it's not over.
Yeah.
It's still happening right now.
It's a story that's still being written.
Exactly, and we're all part of it.
So it's not just about understanding, like, where we came from.
Yo.
It's about, where we go next.
It's about shaping the future, yeah.
That's pretty cool when you think about it.
It is.
But also kind of a big responsibility.
It is a responsibility.
So what can people do, our listeners,
Yeah, well,
to stay informed, to stay engaged in all of this?
first thing, keep learning. There's so many great resources out there.
Yeah, like books, podcasts, articles.
All sorts of stuff, yeah. And don't be afraid to dig into things that might seem complicated at first.
And don't just stick to one point of view.
Right. Look for different perspectives, especially when it comes to these newer areas.
Like crypto and all that.
Yeah. Crypto, decentralized finance. There's so much debate happening there.
Right. And that's good. Engage in those debates.
Yeah.
Ask questions.
Exactly. Challenge your own assumptions, too.
Yeah. And don't underestimate the power of your own financial choices.
That's a good point.
Like supporting businesses that align with your values.
Right. Or looking into alternative financial models like credit unions.
Yeah, even small choices can make a difference.
They really can.
So it's not about becoming an economist overnight.
No, not at all.
It's more about being mindful, being curious about this stuff.
Exactly. Be engaged with the financial world around you.
And remember, it's all a human story.
Right. At the end of the day, yeah, it's about us. It's about our needs, our values.
And how we adapt and innovate.
That's what drives this whole evolution of money.
Well, that's a great place to wrap things up.
Yeah, it's been quite a journey.
From bartering to Bitcoin, and who knows, maybe someday we'll be trading digital tokens backed by moon dust. Right?
Well, let's not get too far ahead of ourselves.
Fair enough, fair enough.
But one thing's for sure, the world of finance is full of surprises.
Always keep us guessing.
So stay curious, stay informed, stay engaged.
Couldn't have said it better myself. So that's it for our deep dive into the fascinating world of money. Thanks for listening.